So guys, good morning guys. Welcome to my live stream. So let me know in the comment section where you are working from, and I hope everybody can see my screen. I hope everybody can see my screen. So let me know in the comment section. Please like. So if you are on the live stream yesterday, you we had an agreement. We look at what volatility is 75. So today we'll be looking. So we did made an assumption. What So we had what we were looking for. So we had what we were looking for, which was volatility 75. So today we want to see how far it has gone. So let me know in the comment section. Let me know in the comment section where you are watching from, and if you find the yesterday class interesting, so let me know in the comment section. So come back to the live stream. So yesterday we talked about volatility 75, and on volatility 75 there was what we talked about, which was the market pricing. So we will be going back to it now and see how far it has gone. So let me know in the comment section where you are watching from, and what was our bias for volatility 75 this morning. What was our bias for volatility 75 this morning? So without wasting our time, So without wasting our time, at Mr. Mark, can you see my screen now? I think you should be able to see my screen now, please. I can see your comments. So let me know in the comment section if you can see my screen now. We can see my screen. So we so I hope you can see my screen. Can you see my screen now, Mr. Mark? Please let me hear your comments in the comment section if you can see, so that I can proceed. So that I can proceed from there. So on volatility 75, we so you can see where we marked out. So you can see this our structure here. So you can see what I was saying yesterday. You can see our analysis yesterday now. Okay, Mr. Mark, I can see your comment now. So on volatility 75, I told you we are bearish. So I marked out this range on this high on my daily time frame. On my daily time frame. So I marked out this high on my daily time frame. So you can see what I was telling you yesterday. You can see what I was telling you yesterday now, that this is my order block. So in ideal situation, I expect them to feed this order block, right? Now in this situation, I expect them to fill this other block here. So I expect them to fill this other block. So you can see now we are what? We are bearish for today, but we are not bearish. I told you yesterday that this current yesterday candle is going to what? Is going to close bullish. Now, if it close bullish, then automatically that means we are coming to come and test this our what? This our key level here. We are coming to test our key level here. Now, this our key level now is our order block. So let me remove it and then we can do proper structuring on it, and then we can align ourselves on this time frame now. Now this is so let me remove this. So let me unselect this. So let me delete this. Then my Fibonacci that I told you that I'm expecting a 2.5 retracement. I think you can have it now. A 2.5 retracement. You can see they are heading to it. Let's go down to 4 hours time frame. I drew this Fibonacci on the 4 hours time frame. So I'm going to be showing you how those things forms in life. How they form what? How they form practically how they form. Right? How they form my what? I think it's on 1 hour time. So when I told you what the retracement is not done yet. Right? So it was on 1 hour time frame, I remember. So on my 1 hour time frame now, so please are just joining us. Please kindly comment in the comment section where you are watching from, the location you are watching from us, and then also comment in the comment section. Let me know if you are together. Now you can see this Fibonacci retracement that I used to measure the retracement. Now you can see we are heading toward 2.520 minus 20. I actually want to remember how we call this thing. I can't remember. So we are heading to the what? To 20 level. I told you this retracement is not done until they get to this what? To this to 20 area. And then on the 20 we have this what? We have this what? Key level there too. So you can see all these things don't just form. This ICT concept don't just form. They are there for you. If you can use them very well, it become easy for you. Right? So you can see this level now. I think we'll mark this. So you can see now we are still within our what? Our we are still within our we are still within the justification of what this. So this is our targeted key area. So if I'm trading now, if I'm trading the London session now, which is the 1 a.m. CMT candle, then that means I'm looking for a bearish market to target. So my draw on liquidity will be this 20 area minus 20 area, and then I'll be this 20 area, and I have this what? I have this in fair value gap. So that will be my what? That will be my target. So what I will now do now, since I've established my bias, so I'll go back to my 4 hours time frame and check for the available CRT. I'll check for the available CRT. Now on this 4 hours time frame now, obviously I didn't have any CRT. The only CRT that I have was this. And you can see at the start of this 4 hours candle, they retested this what? They retested the low of this 4 hours candle, this 4 hours CRT. You can see they retested the retestment that they did there. I knew they were going. Now this is the psychology of what is going to happen. Now possibly this 1 a.m. now will not give up what you want. If you cannot align for a bearish market, because now this is 2 o'clock or 3 o'clock if I'm not mistaken. This is 3:30 a.m. So already the 1 a.m. candle, the 1 a.m. CRT candle would be closing now. Now since it's going to be closing now, so this is how you aligned your so this is how you aligned yourself. Now what you need to do now is that now you go back to your candlestick physiology. Now remember that we are bearish. So for today now, for this particular 1 a.m. candle now, this one we are what? We are bullish. We are bearish. But for 5 a.m. candle now, we are going to be what? we are going to be what? To be bullish. We are buying. Now, if you are going to be buying now, you need to now look at this psychology of the physiology behind every candle. Now, the physiology behind any candle, the sense that for a bullish candle, you expect the market to what? To open, right? You have your consolidation. For a bullish market to open, make the what? Make the low and then expand. Now, if they are making this low now, this is what we need to expect for the next 5 a.m. candle that will form in the next 30 minutes. The next 30 minutes now, the new candle will start forming. So since we know that now, we expect this current 4 hours candle, which is the 1 a.m. candle now, to close bearish. Close bearish in the sense that it's going to close as a bullish, as a sell candle. Now, if it close as a sell candle, then I expect the next 4 hours candle, which is the 5 to open and then trade down our what? Our key level that we have on the 1 hour time frame, which is our fair value gap, which is also our what? Our minus 2.5 standard deviation. Thank you. I remember now. Our 2.5 standard deviation or 2.0 standard deviation. And at that 2.0, we have our what? Our fair value gap. So the fair value gap is aligning with our what? Our standard deviation. So that makes everything easy for us. So that makes everything easy for us. So with that, I know that what? This current candle now is going to close bearish. No do that about it. So if it's closing bearish, what I expect them to do now is that the next 4 hours candle, which is by 9 o'clock, which is by 9, expecting a bullish candle. So the bullish candle says that wherever this current 4 hours candle close is going to trade down to our key level, and then from there we can now have our bullish move. Any question? Are we lost, or there's anything you want me to talk about? Drop it in the comment section. Let's engage. So now I'll go down to my what? To my 1 hour time frame now. Remember, I've already drawn my what? My standard deviation on 1 hour time frame. So I knew where I was heading to. So you can see now, aha, a very perfect one now. A very perfect one. Now, if you see very, very well, if you see very, very well, now look at something here. Let me show you one critical thing here now. Now, yesterday I was talking about the what? The true day open price, that you should buy above the true day open price. Now, this is where the market open. We can see price is above it, is below the price open. Now, at the same time, look at this area too. This is our monthly open candle. So we have a very strong bias to confirm the bullish that we are looking for. Now, remember that I told you that you buy below the open price and you sell above the open price. Now we have two open price: the monthly candle open price, which is this, and the daily candle open price. So these two alone has given us a very strong bias for the bullish move. It has given us a very strong bias for the bullish move. So there's no two doubt, by 5 a.m., if we don't have that bullish move by 5 a.m., then by 9 a.m. CRT candle, we have the bullish move. And it's going to be a massive one. It's going to be a massive one, very fast and quick. Because of what? These two things. Exactly particularly because of this one. This monthly opening price. Price will trade aggressively from it and expand to the upside. So in ideal situation, I expect this candle now to close within this range, to close inside this bullish candle here, this bearish candle. So if you close inside this bearish candle by 9 a.m., then I expect them to what? To trade down to our key level. Now remember my standard deviation. This is how you build your structure. Remember my standard deviation. Let me measure it again so that you already okay. Let me measure the standard. Let me measure it again. So remember our station. So my standard deviation, so my standard deviation now, I want to use it to project the what, how deep this retracement is going to be. How deep it's going to be. Right? Since it's a bearish move, then obviously going to be what? To be using this. So I measure the wick. I can use the wick and I can body close, but I'm using the body close in this place. In this case, I'm using the what? The body close. Right from the top to the what? To the body close. So I expect the retracement to this 2.0, the 2.0 standard deviation, right? This 2.0 standard deviation. So that 2.0 standard deviation, what do you see there? What key level do we have? So on that 2.0 standard deviation, I have this what? I have this, I have this what? This tiny what? I'm not expecting a sell until this level, until they touch this area, this 2.5 or 2.0 standard deviation. Now remember that I measured the wick. So let me change it down to what? Let me use the I measure with the body close. Now let me now change it down and use my what? And used my let me change it and use the what? And let me use the what? The wick. Exactly the wick. Let me use the wick. So if I'm using the wick now, no two difference there. There is no what? There is no much difference. Sorry. So if I'm using the wick, I have my what? I have my 2.0 area here. Now my 2.0 area now. Yeah, this was exactly the weekly open. So I have the weekly open. That was the open price for the weekly. So look at the confirmation I'm having. Very strong formation now. Open price. I have the monthly open price. I have the weekly open price. So I can say that what they are actually coming down to this what. Look at this other block. They took at this high. Have they retested it? They've not retested it. I don't think they've retested this other block. That block here, that block, they've tested it. So possibly they are coming down to this what? We are bearish up to this area here. Now, if we are bearish up to this area, I think we'll measure the what? There was one CRT we'll measure on the daily, weekly time frame, if I'm not mistaken. So you can see how they what? How they align together. So this is 2.0 minus 20 standard deviation. So I expect this to still last to this area. I'm not doubting it. I'm not what? I'm not doubting it. So I'm not doubting that. So let's go down to our weekly time. So now everything aligning together now. 2.5. Now you can see what we have here. Let's see monthly time frame. Let's see the what? The CRT on the monthly time frame. Now, so on the monthly time frame now, this is serious. Now, I talk about something yesterday again in that video that I posted. If you have not watched the video, well, I did what? Introduction to what? To CRT masterclass. Now, I told you every candle you expect a retracement to last at least 50% of that. Was in my masterclass I was doing that. that was saying that. Now look at this previous month candle. It's very easy. If you look at very well, this previous month candle closed above this what? This high, this candle here. So automatically it made this month to be a what? To be a bullish month. Now we can say this is the what? This is our range low. Now if you see the same thing again, they close above this what? So this became a valid order block, a change in what? In structure. So we expect, now we are bullish. We are changing the bias to be a bullish bias now. So we expect that this current candle now, so this retracement now should come down to what? To this area. So three things are meant to happen, or two things are meant to happen. I must be very careful with my bias since I have my higher time. So automatically now, this can be a what? This can be a that CRT candle, monthly CRT candle, whereby this is going to be my low. Now if I'm treating this as a candle now, I expect them, they've taken the high already, I expect them to take out the low. Now taking out the low might not be possible. Why? That we might close this month the way it is, because in the next 3 days we'll be ending this month already. So this can close as a CRT candle. Now if this is closing as a CRT candle, then we need to pay attention to what? We've already established that what? We have our order block, a change in bias already. So this is a valid order block. So I expect them to tap the open of this what? Order block. So if they are tapping the open of this order block, if they are tapping the open of this order block, then now what will I do? I will now bring my what? My Fibonacci to measure the what? The range of this particular candle now. So at least I expect them to what? I expect 50% retracement. This is a standard rule. For every candlestick, you must have 50%, at least 50%, or 0.2%. So this is the low, or 0.3. So you all agree with me now, you can see the what? The 0.3 level, right? You can see the 50%, which is this. Now the 50% of this previous month candle now align with what? The 50% of this month current candle now align with what? With the high of this our order block. Look at this. We treat this as an order block. You can see the 50%, right? You can see the 50%. So this is a valid CRT, no doubt about it. So this current candle now, this current monthly candle now will close inside this range of this candle to actually confirm this. So we'll be trading the what? The next month now, we are be a what? A continuation of this CRT, continuation of this, in the sense that now we want to see a bearish move, and then they will come and tap this 50%, or rather they can come and tap this other block here, of this other block, which is a very rare case. And then so if they are moving for the monthly candle now, the next monthly candle, we expect this, we expect this, right? We expect this. So that is that. So for this current man, I'm just waiting for us to close, for this current candle to close, so we can align ourselves on the 5 a.m. CRT candle. So this is for what? This is for volatility 75. So let's quickly check for volatility 500. Boom, 500, just like we did last night. So just like we did last night for volatility for boom 1000. I hope it's making sense. I hope it's making sense. Let me know in the comment section, please, if it's making sense, or if you are lost, please. I will appreciate your what? Your comment in the comment section. So this is boom 1000. So we say we are what? We are bearish, if I'm not mistaken. So we have what? You can see the daily candle. Please let me have your reaction in the comment section. Or I should not touch this boom 1000. We should just focus on volatility 75. And with the look of things, it seems we'll be having our what? We'll be having the live stream at the night. It seems we have more people available in the night than this morning. So this is our daily. So look at the structure here. This candle close inside, still bullish. I think we'll have a CRT on the weekly time frame. Still with me? Please, you are with me. Drop in the comment section. Let me know if I'm not alone. And now we have the CRT. Okay, taking out already. Please, for those who are still with me, let me know in the section, please. I think we have the month. Okay, we have this. So since I've not gotten any comment in the comment section, I think we'll just focus on volatility 75 alone. People are not interested in boom and crash. It's fine. So let's just focus. Money matter. Okay, you're following. Okay. So should we continue with boom 1000 or we should just go back to volatility 75? Let me have your comment in the comment section. Should we continue with money matter? Should we continue with 1000? Okay. So let's continue with 1000. So boom 1000, what was our bias yesterday for boom 1000? I think we have this CRT here. Have this CRT. Money matter, you can after the live stream, please reach out to me. You see my WhatsApp link on the description. Please reach out to me. Let me get to know you more better. So for boom 1000 now, we are on the weekly time frame. What we can see. So I think we'll have a CRT on monthly time frame, if I'm not mistaken. Yes. We still will have this on the monthly time frame. We have this CRT on the monthly time frame. We have this monthly CRT on the monthly time frame. This that we treated this as our what as our CRT. Okay. So we treated this as our CRT. So we treated this as our what as our CRT, right? As our bearish what CRT. Right. So we said we expect them to take out this high. Right? We expect them to take out this high. So I'm just doing this at boom 1000, waiting for what? So for 9 o'clock so that we can have a new 4 a.m. a new 4 hours candle that will be starting, and then we can have our 5 a.m. candle. So I have this, we treated this as our what as our CRT, right? So I expect that before anything, why did I treated this candle, this particular candle, this one here, this bearish candle? Why? If you look at very well, this particular candle closed inside it. So it closed inside it, so it makes it more valid. It makes it more value. So that was why I treated it as a what? As a same thing. I expect them to take out this eye candle before anything. So before anything, I expect them to take out this eye. So I can mark out this eye as our, so I can mark out this as our what? As our CRT high. So this is our CRT high. So this is our CRT high, right? So since this is our CRT high, so for those that are just joining us, please comment in the comment section. Let me know if you are with us, where you are watching from, and the CRT candle that you want us to watch, the asset you want us to watch to discuss. So this is our CRT low, this is our CRT high. So we've established that time frame. Now we can now go down to what? To daily, to week. Now align ourselves on the weekly structure. It's very, very important. So we need to align ourselves on the weekly structure. It's very, very important. We align ourselves on the structure. So on the weekly time frame now, on the weekly time frame, we have now on the weekly time frame, you can see this. This is our order block because this was the last expression that we have. Now, if this is our order block, then there's something we need to consider. Have they tested the order block? Now we now need to look at the what? The open of the what? Of the order block and the what? Pay attention to order blocks. You pay attention to three things on order block: the open, the low, and the what? So this is our open. They've tested it. This candle already tested it. Fine. Agreed on. So this was the candle that closed below it. So we expect a retesting of this what? The open of this order block. A retested area of it. So let's go down to what? To daily time frame. We can see a bigger picture, a well structured daily time frame. Okay, so on the daily time frame now, this is our CRT low. If you are not, if you are with us, this is our low, right? This is our CRT low. Now, the same thing that I did with my Fibonacci, wherever I use my Fibonacci, getting the retracement or the expansion, I told you we can use our what for it. So I'm still going to be using my what? My Fibonacci again now to measure the what? The retracement, to know how far this retracement will last. So most likely now I will use this. We expect retracement, since it's a bearish one, it's going to be facing down. So this is my range, my standard deviation range. If actually deviation, you want me to make a deep video on it, comment in the comment section. I would, you can see. So this is my range. So remember what we said, we expect the what? The retracement and expansion. For every expansion, it must last to the what? To the 2.0 area or 2.5. Now at this 2.0 area, this is minus 2.0 and this is minus what? 2.5. So now at 2.5 now, so within this area, this is what we have. Now, most likely I'll be going for what? For the 2.5 area. Why? Because I have a key level at that area that justified that for me. I have a key level. Crab driver, okay, from Lagos. You are welcome. You are welcome. So at the key level now, at this 2.0, 2.5 area, I have this what? Look at this fair value gap that aligned for me. I have this fair value gap at this 2.5 area. So that is why I'll be using, I'll prefer the what? The 2.5 area. Now at that 2.5 area also, which is my CRT low. Remember, these are monthly CRT, weekly CRT low. No, monthly CRT low. At that area too, I still have what? Look at this order block. This is a valid order block. Why? Because it has taken out liquidity. So this is the what? This is my order block. So this is the range of my order block, right? So at this 2.5 area, at this 2.5 area, this is where I'll focus much. So I expect this sell to last it to this area. Why? Because I have this fair value gap aligning with the area, and also I have the open price of this other block that caused this expansion here, that break this structure. So I'm bearish on boom 1000 up to this area. So my bearishness on daily time frame now aligns with my monthly time frame. Now on my monthly time frame, I want to show you we've seen this CRT, if I'm not mistaken. So on the monthly time frame, we can see what we have there. So on the monthly time frame now, you can even see another thing entirely there on the monthly time frame. The same thing that we saw there too now. So on the monthly time frame, if you treat this as a CRT candle, then we expect 50% of this range, right? But me, I'm not even seeing that. You can see the CRT that we are talking about. Can you see this is the low? So we have the 2.5 now. So I expect that, okay, and if I'm looking at it from this perspective, at block here, so I expect the low to be taken, right? So that is what we are bearish on boom 1000. So we can now go down to 4 hours time frame and look for our CRT candle. So you always look for your CRT candle on the 4 hours time frame, but you pick your bias from daily time frame or weekly time frame. You pick your bias from the daily time frame or the weekly time frame, right? So let's just move down to so on our 4 hours time frame now, we now be picking our CRT. So let me delete this area. Okay. Up and not lost. So this is 9 o'clock already. So a new 4 hours candle is starting already. No, we still have another 1 hour candle. So it's not 5 a.m. yet. So we can have expansion now. Now looking at the 4 hours candle now, let's look at the price action here. Now for this 4 hours candle now, you all agree with me that this is our This is our CRT candle here. This is our This is our CRT candle here. Yes or no? This is our CRT high. Why? And this is our CRT. This is our CRT low. Yes or no? So that with that said, that shows the the that is telling us we are bearish. So this is our this is our CRT high. I hope everybody understand why I picked this as our CRT candle. Now, if this is our CRT candle, please comment in the comment section if we are on the same page. If this is our CRT candle now, then that means we are bearish. They've taken if you mark this as a we cannot mark this as our CRT candle. Why? Because this particular candle now close inside this range. You can see it close inside this. So this is our This is our valid CRT. We cannot mark this as our CRT because it close inside the range of this. So this has taken liquidity of this. So this is going to be our what? Our CRT. So if that be the case, we just need to align ourselves to what? To the draw on liquidity to this low here. So since I've established that now, remember that we started another candle now, which is the what? Which is the 4 a.m. candle. So we can now go down to 1 hour time frame. So from 1 hour time frame now, I can now align myself to the sell on this particular move now, to sell this to this, to take out this what? This low. Please like. So I hope we are following. Are we on the same page? Money matter. Are we still are we still together? Are we still together? Money matter, are we still together? So on 1 hour time frame now, we will do the same thing on 1 hour time frame. Now look at 1 hour candle, the last 1 hour candle that we have here. Okay, money matter, I can cite you. Okay, so on 1 hour time frame now, what do we have there? Look at the structure. So if you want to sell, if you want to sell on 1 hour candle now, automatically you agree that this is a CRT. We can treat this as a CRT, this particular candle here. So in this situation, look at, our what? Our long time drawn liquidity is this CRT low. Now this CRT low is also aligning with what? With the weekly open. You can see that with weekly open price. So it become very strong that we can buy from this area. But before then, they need to what? They need to trade am. Now look at this. This is a what? This is an equal high, equal high. So I expect them now, for the fact that this last candle now close bullish. So I expect them to what? To take out this liquidity here. We should have a what? A spike. Now this is where most of you got it wrong. Pay attention to these things because it has happened to me times over number before I get to realize it. Now looking at this last candle now, since it closed bullish, many of you will see that okay, we've actually turned bullish. You can now start trading spike. Now if you want to trade this spike now, they are only trying to lure you. They want to induce you. They want to trick you to enter for what? For spike. Now if there's going to be a spike, the spike is only coming to come and take out the what? This liquidity that we have here. Just from what? In sense that we are forming a what? We are bearish. This next candle should be a bearish candle. And it's going to be a bearish candle. Remember the psychology for bearish candle: open, high, low, close. Now they've opened here, right? So I expect them to what? The high now, we expect the high to form now. So if this high is forming, then that means where is the available liquidity? These two equal what? These two equal low. This is the available liquidity. They need to take out this liquidity first. So now this is where majority of you get trapped in. I still repeat myself. Now this is 9 o'clock. Remember that by 10 o'clock, we are starting a new 4 hour candle, which is the 5 a.m. CRT candle. So now you expect a spike to come and take out this low. So if I'm trading the spike now, I'm targeting the high of this what? This candle. I'm targeting the high of this candle, this bullish candle here. That is where I'm targeting. So I expect the spike to last to that area. Hope we're on the same page. Are we lost? So these are the mistakes you need to avoid. When I tell you time over price, these are the things that I'm looking at. I know there's going to be a spike on volatility on boom 1000. Now, but the spike should not exceed this area. In a worst case scenario, if I want to be sure again that okay, they might actually decided to go beyond that area, what am I considering now? Then I need to consider, then I use my what? My retracement, my standard deviation. So if I'm using my standard deviation, then I need to measure this range again to be sure that I am on the same page. with them. I want to know how long this retracement, this sell will last. So now I'll bring in my what? My Fibonacci again to measure the range, to look at more for my standard deviation. Now, if I'm looking at my standard deviation, it might pass that. But look at, this is my what? Since it's a bearish candle, remember that I said we always have a retracement at what? At 2 standard deviation, 2.5 standard deviation. Right? So now I'm going to be measuring that. Right? So if I'm measuring that now, this already tell me that what? At at 2 standard deviation, which is for what? Which is my normal open price. You can see I have the weekly open price below it. Then I have this what? This old low at 2.5. 2.5. Look at this old low. So this is aligning with my what? My 2.5. So I know this said we are not any spike that you see in boom 500, boom 1000 now. You can see we have a spike. It's just to trap the liquidity above this area before they will continue down. So that is why they will not trap you. So this is how you get caught up. And I say I waited for the spike. It did not come. They just what is and this is how you get trapped in the market. If you have ever been trapped like this in the market, comment in the comment section. Let me see your comments so that you will not be making the same mistake again. So this is how you get trapped. So I'm expecting the retracement to last about at least 2 standard deviation or 2.5 standard deviation. Right, at least 2.5. So I have this liquidity line now. So I've established my what? My draw on liquidity than what? Than bearish. Don White, well done. I know many times you've asked me the question. So this is how you get trapped. You need to understand time, and then you need to understand the power of time. This particular, at least I know, but 1,000 did that shege for me. He collected nothing less than $2,000 from me. The spike just happened between, I can't, it was last year. It happened around, so I was expecting a larger that they will continue to spike for 2 days.